We are now live on Facebook, and we are going to start our presentation on federal alternatives to collection. I'm Sarah Laura. I'm the director of the Low-Income Taxpayer Clinic at Lewis and Clark Law School, and I have with me my three lovely students, Rachel Olehar, Elena Kajacob, and Justin Richter. Take it away, Justin.
All right. Scene one, take two. So you're here because you want to learn about federal collection alternatives, and I understand that. But before we get into that, we thought it would be important to tell you about one thing that we've been seeing here at the clinic, which is that the IRS is sending out their tax collection notices within a very short period of something called the collection statute expiration date, which is a statute of limitations or a time frame in which the IRS is allowed to make collections on your debt. Now, essentially what this means is that it could be possible that if you're experiencing a tax debt, it could be from a tax year that's close to the collection statute expiration date, and you might just want to wait it out. For instance, if you have a tax debt that's 9 years old, it might be in your best interest to wait it out for a year, because some of these federal alternatives to collection can be lengthy, and two, they can toll your collection statute expiration date. But that's something, if you want some additional advice, then you could go ahead and reach out to the Low-Income Taxpayer Clinic, and we can sort of advise you more on your specific situation. But that's just something to take note of, is to see when that tax debt started, and see how close you are to that 10-year limitation. All right, now here's a couple things before we get into each of the specific alternatives to know, which is that you will start accruing interest and penalties on your tax debt, on your unpaid tax starting on the date that it's due. And so if you have already received bills or collection notices, you have already probably accrued interest and penalties. So just be prepared to pay those and see those. And also it gives you a little bit more incentive, if you can, to pay early and use these alternatives if you can, as early as possible. Now, the IRS will send you 2 bills for your unpaid tax before they start the collection process. They look like bills, and they haven't started collecting yet, but it is your warning signal that you need to get moving on the process. And the reason for that is because collection can be severe. They may withhold your future refunds. They may even seize your property, assets, issue liens. And so if you want to avoid that, you'll want to start one of these collection alternatives as soon as possible, because oftentimes it'll pause or delay that. Now, there are 3 main alternatives that we use here at the Low-Income Taxpayer Clinic to the IRS collection. The first is currently not collectible. The next is offer and compromise, and the third is installment agreements. And so time is of the essence. I just can't reiterate that enough. The sooner you deal with things, the better it will be. And Rachel is going to take it away and tell us a little bit more about currently not collectible and if it will apply to you.
Yes, I will. Currently non-collectible. So you owe the IRS. Can't get them off your back. Debt seems crushing or impossible to pay off. Do you feel like a poor, unfortunate soul? Your financial situation is grim. You don't have the money to pay extra payments each month. You're in a tough spot and can barely take care of living expenses, let alone the IRS. You've exhausted all your options. They won't appeal your penalties, and now the IRS wants a huge chunk of change, and you're the one stuck footing the bill. The answer might be for you. It's time to get the IRS out of your world. Well, temporarily. If you are experiencing financial hardship and can't afford to pay the IRS right now, your account may be eligible for, add emphasis, currently non-collectible status. What does it mean? It means they currently can't collect from you, albeit temporary, if the IRS agrees that you are undergoing financial hardship and they place your account in currently not collectible status, all collection attempts will be put on hold. Next slide, please. How do I do this? I don't know how to talk to the IRS. They're scary. It may be intimidating to try and communicate with a large federal agency, but don't worry. The IRS has procedures that mainly involve filling out forms. Boring, I know, but the IRS understands one language, and that is fancy and complicated looking numbered forms. So what do I do? First things first, gather your evidence. The IRS will want proof that you are suffering financial hardship. Believe it or not, they won't take your word for it. Get your paperwork together, get bank statements and proof of income. If you skip this step, the IRS is going to ask for it anyway, so just get ahead of the game. Next, call the IRS directly using the number we provided, or fill out their obligatory forms. Form 911, as in 911, what's your emergency? Please send Robin Hood because Prince John has got me in too much debt. Or, the IRS wants me to starve in order to pay my taxes. JK, submit Form 911 and also Form 433F to make a collection information statement. Next slide, please. Form 911, Form 433F, what are you even talking about? What kind of foreign language are you speaking here? Sadly, it's not a foreign language. It's form in language, as in get your forms in if you'd like to get your account into CNC status. Next slide, please. Form 911. If this is all too much for you, try TAS, or a taxpayer advocacy service, who are there to advocate for you. The TAS is an organization within the IRS to make sure you are treated fairly. Their slogan is, "We're your voice at the IRS." Just make sure you have all your evidence, supporting documents to hand over to them. They can help you with all the jibber jabber on the forms. Where is this form? Why is everything so complicated? Why is it complicated? Because the IRS hates us. Just kidding. I don't know why it's so complicated, but it's not complicated to find the forms you need. See our flyer or handout that we've prepared, or we can send you a link, or you can just Google it. Google Form 911 IRS, and you can fill out the form online. Next slide. This is what Form 911 looks like. Next slide, please. Form 433, another form. I know, it seems like a lot, but I promise it's not as bad as it seems. The IRS uses Form 433 to collect all your financial information so they can decide what you can afford to pay, if anything, towards your tax debt. Where do I get this form? Well, the same as the other forms. We have links, we have flyers, we have Google, or we all have Google. Next slide, please. This is what Form 33 looks like, 433F. Next slide, please. The good, the bad, and the ugly, or more like pros and cons. Why it's awesome? Well, get the IRS off your back. Get immediate relief from collection activities. Whew. The expiration date does not move back because of your account status. So the CSED, which is what Justin talked about in the beginning, is the date the IRS can no longer ask for your money, usually 10 years. and getting your account in CNC status will not extend the expiration date. So from the time you filed your taxes, you have 10 years to pay it. Then the IRS can't ask you for it anymore. So, but getting in this status won't push the years back. So what's the catch? The debt doesn't go away. It's still there. You just don't have to pay it yet. Also, interest. It will still pile on. The last thing, the IRS will start taking your future refunds. Expecting a large refund next year, the IRS will keep part of it or all of it in order to start collecting your debt. Well, that's all I got. Take it away, Elena.
Okay, I'm going to talk about another collection alternative called offer and compromise. Am I showing up? Yes. Okay, some taxpayers are eligible to settle their debt permanently with the IRS by submitting what's called an offer and compromise or an OIC. Whereas currently not collectible, which we just heard about, is a good way to keep the IRS from collecting temporarily. OIC is a more permanent solution to get out of debt with the IRS once and for all. Next slide. With an offer and compromise, the taxpayer offers to pay an amount that is less than the total that they owe the IRS. If the taxpayer is eligible, which we'll talk about next, and the IRS finds the offer reasonable, the taxpayer will only have to pay the amount offered in their offer and compromise. The rest of their federal tax debt is then forgiven. The guidance in this video, just by the way, is only intended for individual taxpayers. If you have a business, an offer and compromise can also work, but the process is slightly different than we're going to explain here. Next slide. Who can benefit from an offer and compromise? Taxpayers who have debt with the IRS and want to get free and clear of it, but who really cannot afford to pay the full amount owed can benefit. And an offer and compromise is also a way that a taxpayer can contest what the IRS thinks they owe if you have proof that that amount is incorrect, which sometimes happens. Next slide. Only eligible taxpayers can make an offer and compromise, and to be eligible for an OIC, you must be current on all your required tax return filings. That means you have no back taxes that you haven't filed. You must owe more than you can reasonably pay and be able to prove that. You must have received at least one notice of assessment or bill for your tax debt from the IRS. You must not be in current bankruptcy proceedings. And you can Google the OIC pre-qualifier or visit this link to confirm your eligibility for an OIC. It's just a short questionnaire. A couple of things to know. Important conditions come with an offer and compromise, and you want to be sure you can meet these before you submit an offer. If the IRS accepts your offer, you must stay current on your tax return filings and your payments for the next 5 years. So only make an offer if you think you can meet that condition. Also, the IRS will keep any refund you receive for the current year, for the year your offer is accepted, in addition to whatever you pay with your offer. Next slide. Now we'll walk through the steps to prepare an offer and compromise. And this is just a general guide. Remember, it's a good idea to consult the IRS website for the most up-to-date information. And you can always contact a low-income taxpayer clinic for assistance if you have legal concerns. The first thing you'll need to do is gather documentation that proves both your income and your expenses. You'll need to send copies of these with your offer and compromise. These commonly include 3 months of pay stubs or bank statements if you don't have a job currently. All information related to any assets you own and information related to your household expenses like bills. And a good tip is that if you have other circumstances that affect your financial situation that these documents do not reflect, you can include a letter explaining the specifics of your situation. Maybe you're out of work because you're caregiving for someone or have a medical issue, or you've had other challenges that affect your ability to repay the IRS. A letter will help the IRS get a full picture of your situation, and it might improve your chances of getting the offer accepted. Next slide. Next, we recommend that you visit the irs.gov/OIC site to get a little more familiar with everything you'll need to submit for your offer. First, read the FAQs, watch the video, how to complete an offer and compromise, and then download on the top right corner there what's called the OIC booklet or Form 656B. This contains all the forms and a list of evidence that you'll need to submit. Inside the OIC booklet, you'll find Form 433A, which you'll need to fill out in order to calculate what hopefully the IRS will consider is a reasonable offer. Remember that for every expense and income you list, you need to have some kind of proof like pay stubs, receipts, etc. Next slide. After you calculate your offer, you'll fill out Form 656, which is also included in the OIC booklet, to actually make the offer. Before you submit everything, review the application checklist, which is at the end of the OIC booklet, and make sure you have all the required forms and documentation before you submit it. Finally, you'll submit your offer to the address for your state that is listed at the end of the OIC booklet. And make sure you check not this slide, but the actual booklet in case those addresses have changed. That's it for offer and compromise. The IRS will eventually notify you if they accept your offer. That can take some time. They might need more information, or it's always possible that if they disagree with that your offer is reasonable and believe you can pay more, they will let you know that, and you can continue to try to work with them. You can always contact a low-income taxpayer clinic if you decide you need legal assistance with your offer or another matter. Thanks.
Great. Thanks, Elena. All right, so now we're going to talk about installment agreements, which come last because they're arguably the worst form of collection alternative. Anyway, an installment agreement allows taxpayers to pay their tax debt in monthly installments over a maximum period of 72 months. Now, the reason why the other collection alternatives are preferred is because taxpayers are responsible for paying interest and penalties on their tax debt over the lifetime of the installment agreement. So for example, if you were able to get an offer and compromise and you were able to get that taken care of pretty quickly, you'd be saving yourself, if you took the full 72-month period, you'd be saving yourself several years of interest and penalties. So currently the IRS interest rate, if you were to do a installment agreement, is 3.13% compounded daily, which I'm pretty sure Einstein said that compound interest is the greatest force in the known universe. So you want to see if you can obtain a personal loan or a loan for the bank to pay off the IRS at a more favorable rate. Consider that. And then also, if you could pay the tax within 180 days instead of going into the installment agreement, which is essentially a long-term payment plan, you could do the short-term payment plan and save yourself on some fees. You can go to the next slide. Now, for the short-term payment plan, like I said, you need to be able to pay within 180 days. This is for people that, sort of maybe just had some expenses that came up that they didn't expect, and they're waiting on the paychecks to come or something like that. There's no setup fee. Of course, the debt still accrues interest and penalties because the IRS is unforgiving, but it is that you won't have the additional fee of setting up an installment agreement, and it's as easy as filing an application online. The next slide, please. Now, for the installment agreement, you have to pay in full within 72 months and divide that by 5. But the debt still accrues interest and penalties. But really where it hits you is if your debt is over $50,000, then you can't file online, which is a huge pain in the butt, and you have to do the form in language, like Rachel was talking about with Form 9465. Now, if you have less than $10,000 of tax debt, you can actually get automatically improved if you've timely filed and paid your taxes for the previous 5 years. You agree to a maximum 36 month, which Sarah can do the math on that, and you're unable to pay your outstanding tax debt at the time that it's due. So it's not just like you don't want to pay, it's that you can't. All right, next slide, please. So this is the table of fees that the IRS will charge you to set up a loan to pay off your already existing tax debt. You just ponder on that for a second. Now, if you're a low-income taxpayer, you may qualify for a fee waiver. And we'll talk about that in a second. But what you'll notice here, the big thing is that you want to file your application online with a direct debit checking account, because that will save you the most money. Next slide. Now, if you're a low-income taxpayer, which if you're working with a low-income taxpayer clinic, you already are, it's whether your gross income is at 250% or below the federal poverty guidelines, you're a low-income taxpayer. Now, if you use a direct debit payment and you're a low-income taxpayer, the IRS will waive your fee. But if you don't, and you use like a credit card or like, I don't know if they do money orders or whatever, then the IRS will simply reduce your fee. But then what they'll do is they'll reimburse you at the end. So it just is a bigger hit up front. Now, if you don't think you qualify as a low-income taxpayer, or maybe you're facing extreme hardship, or maybe your income doesn't reflect, like change your gross income for the tax year doesn't reflect hardship or changes to your situation, then you can submit a form 13844. It's very straightforward, but tedious. And that's it. That's it. Yep, that's it.
Thank you everyone for coming. I appreciate it.
Thank you, everyone, for attending our presentation on federal alternatives to tax collection. Feel free to reach out if you have additional questions